Good morning, everyone. Welcome to the morning kappa at 8 on a Wednesday. I'm here to present the midweek futures traders technical brief. We are on the week 1 September 2025. This is a table whereby we have got all the products traded by traders, and the popular ones obviously are all here. And from what we noticed from the comparison between week 4 of the previous month, we see that there has been actually a shift in the setups of the current market situation. Mostly, we have noticed that the US indices are the ones which have moved to a neutral position, especially the Nasdaq, the S&P 500. The Dow is still in a positive setup, as it is maybe a index which is only comprises of 30 stocks, and therefore it could be a bit different as compared to the Nasdaq or the S&P 500. But anyway, we can see that after a very impressive run, there has been some profit taking and some recalibrating of positions in the US indices. Noticeably, because of the news that the Fed may cut interest rates this month, the metals have actually gained ground, and both, in fact, three that we are tracking here, the gold, the silver, and copper, have all been trading on a positive setup. For crude oil, although it's been creeping at the low end, it is also trading in a very positive manner. Although the volatility is slow, but the trend that we are noticing is that it is slowly building up, maybe for some kind of a rally. As for the Hang Seng Index, we also saw there has been a bit of a consolidation, and mainly due to the fact that sentiment has been affected by the US indices as well. For our local products, the FKLI, from a positive, also it has moved to neutral. Now we move on to the palm oil outlook. As noticed in this chart, palm oil prices were actually on a decline, and this is one of the levels we have not seen for at least the 3 or 4 weeks. And also the high prices have actually reduced purchases from major importing countries, and also a weakness in soybean oil has added pressure on palm oil as well. Also, the edible oil sector has faced strain from active US-China trade discussion, and this has created a negative sentiment that has initially impacted soybean oil and also spreading to palm oil. So this is the scenario that we have been trading in. So we expect slightly more consolidation on palm oil and tracking soybean oil very closely. Just a snapshot of the commitment of traders for the US indices. The S&P 500 has registered a reduce of short positions by an estimated 32,000. The Nasdaq saw traders adding 3K of short positions, and the Dow was unchanged in overall net long perspective. So again, we see there is actually a very mixed movement in positions even by traders, and mainly due to the fact that prices have come up a lot, and therefore it's a bit more difficult to juggle the positions in their portfolio. And I would say that the S&P 500, despite of a reduction in short positions, we have also noticed corrective mode has set in. For agriculture, we are going to focus on the soybean oil today. But I think overall, in terms of position, noticeably, the grain markets is holding a negative narrative. However, soybeans was the only one in the list that showed short covering with a reduction of 5K of shorts. Moving to soybean oil, which is the product that we are proposing today, it is a interesting setup that we have seen. It has hit a support quite a number of times on the low end due to the fact that the market has been trading on neutral. Basically, soybean futures has been trading lower as China continued to shun purchases from the US, and also forecast for improved rains in the coming days, which reinforce expectations for a sizable harvest. Okay, corn is also developing into something. The concerns that there was actually yield sapping disease and dry conditions in some parts of the Midwest Farm Belt would trim yields as farmers prepare to harvest a record crop this autumn. So with this lingering information, I think there would be a chance that prices could actually bounce off the low. So therefore, soybean oil has been proposed for this week's observation. So this is the trade setup for soybean oil. We have got a existing profile which is positive, and also a short-term trade up that is also positive. Current price is 52.5, and we are looking at it to dip into 51.80, which is our reference price, and after which 52.50 would be the take profit level, and also a potential loss price at below 51.30, which gives us a value of USD 300. Moving to energies, this is the commitment of traders for energies. Generally positioned such as crude oil and natural gas have little movement in the overall positions. This is an indication that sentiment is on the neutral side, and also attempting to break away from the current form. So this is the chart for micro crude oil. We are looking at October 2025, and basically prices have been impacted by concerns over tighter global oil supplies, and this has also been exacerbated by the Ukraine's attack on Russian refineries, which have cut Russia's crude processing to a 3-year low. Also, comments from US Treasury Secretary Vincent were bullish for crude when he said the US will look at additional sanctions on Russia for prolonging the war in Ukraine. So when we see the setup here, current profile is positive, and we are also looking at a short-term chart, which is also positive. Current price for micro crude oil is at 65.62. We are looking at a possible retracements to 64.70, which is our reference price, and after which a rebound to 66.40, which will give us a value of USD 170, and also a potential loss price if it goes below 63.60, and that will give us a loss of USD 80 US dollar. So I've come to the end of my presentation. I'll pass on to the next speaker. Over to you, Joseph.
All right. Morning, everyone. So I'll take over from here from Vincent. We'll just look at the market. All right. And I can see that the one of the things that market is looking forward for today is regard the this military parade happening in China. And looking at the index, right, the Hang Seng have pulled back slightly, but overall the index still remain above the 20 and 50 days moving average. We can look at our report and you can see that the support level of 23,800 point remains intact so far. But currently the market is undergoing some sort of corrections. Now, last week, if you follow our this technical report, you also notice that we have been writing a few commodity stocks, especially the gold related counters, such as the Zijin mining and a few gold related stocks. So those stocks have actually went up higher in tandem with the gold price that right now at the US market have reached 3,005 resistance. Just to recall that I think 2 weeks ago, right, market consensus have tilt towards belief that Fed is going to cut their interest rate in September, and that have actually boosted a very strong demand on the gold, right, and hence as for the Hong Kong market, right, gold stocks have reacted positively. Then on the apart from the gold stocks, you can see that at the Hong Kong market, a few commodity stocks also have rallied higher as well. So I think today and tomorrow, while the market is undergoing consolidations, right, we can continue to focus on the commodity stocks at Hong Kong. In the event that you are bullish on the Hang Seng Index, one of the sector that I'll pay attention to would be the bank sectors. So far for the past 3 to 4 weeks, the bank stock have undergoing corrections. I'm just waiting a better timing to see whether there will be a breakout from the bank stocks. Among the index stocks, one of the big cap that I'll be looking at today would be the Petrol China. That from a technical perspective, the chart about to break out together with another gold stock, which is Jiao Taifu, so-called 1929. Then on the US market, nothing much change apart from what we have learned last week, that the Court of Appeal have rejected Trump tariff. But if you look at the posting, Trump is going to escalate it towards the Supreme Court. And looking at the compositions of the US Supreme Court, looks like the out of the 9 judges, 6 lean forward to the Republican or more conservative judges. So I think that will give market some, well, anyway, market will be looking forward for that. And I think the US market will also move again right after today, which is the China this event. Overall, we still keep bullish bias on the Dow Jones. Just look at our Dow Jones index futures report. And for Malaysia, the FKLI remains on the consolidations. We may pull back towards our 1535 level. We keep our stop loss point at 1535. And as for the FCPO, remain bullish bias. And our stop loss level is 4250. You can actually look at our report as well. Now, pertaining to our FKLI as well, we can see that last 1 week, market is actually going for some sort of corrections. And if you follow the IMAN weekly update as well, you can see that this coming month, September, seasonally is actually a bearish month. Now, in the event that FKLI or FBM KLCI will undergo a corrections, do look for some defensive counter. And this morning, I'll be looking at Mr. DIY as look at yesterday, the stock price actions. Mr. DIY charted a candlestick with a very long lower shadow. Now, you must also bear in mind that in the market, there are certain blue chip stocks going for positive movement, and certain there will be more on the rotation play, on the defensive play, where the market, once the CI come down, the stocks will rebound. So I think that if the CI were to have corrections, Mr. DIY will see a rebound from there. Then on second stocks that I'll be looking at will be Life Water. a Sabah-based company. From a technical chart perspective, the stocks are post for a breakout as well. Okay, so afterwards, just download our technical report and you can look at this Hong Kong trading stock as well as the Malaysia trading stocks. Sorry for the technical issues. I can't show my slide today. Thank you for joining. I'll pass the stage to Alex on the market strategy report. Thank you.
Hey, morning, everyone. Thanks for joining the morning Kappa call today. Just let me quickly run through the June quarter reporting season that just concluded yesterday. So essentially, in a run-up to this June quarter results, I think expectations were fairly low on the back of considering the global trade uncertainties, Liberation Day tariffs that were which was announced by Trump in early April, as well as the volatile geopolitical landscape during that quarter. So expectations fairly low. And I think the hope was that corporate Malaysia just got through this period without any kind of major negative signals or any kind of negative downgrades. So I think as it turned out, while the numbers were on the softer side, but I think we can consider it to be broadly within expectations, and the June quarter numbers in its entirety was probably as good as it gets. Two sectors beat expectations, three missed, and this compares to 4 above and 4 below in the March quarter. Large cap earnings reductions, fared better, smaller cuts of 0.7% and 0.3% for this year, next year, compared to slightly bigger 1.7% cuts and 1.1% for the RSP basket. Misses to beats ratio worsened to 2.8, and this is up from 2.5 in the preceding quarter. So overall, 13% of the stocks under coverage beat, 37% missed, broadly similar kind of ratios to the preceding quarter. And sectors and stocks that beat expectations include plantations, gaming, whereas property, healthcare, and gloves disappointed. Biggest cuts came from Petchem again, technology, gaming, healthcare, gloves, telco, Guangchong. That was offset by positive earnings revisions from plantation stocks. Large cap names, saw the downgrades from Petchem, CIMB, Public Bank, IHH, and Celcom DG, but offset by positive revisions from the plantation names as well as Hong Leong Bank. Interestingly, the forward guidance that we've been hearing from the large caps was guidance that was noticeably more upbeat. And I think a common theme was for hopes for a more stable operating environment in the second half of 2025 that is helped by better tariff clarity, bolstered by ongoing government stimulus, the preemptive OPR cut, as well as a stronger ringgit that helps to underpin expectations for improvement in business and consumer sentiment going forward. Okay, so so I think overall, I think in terms of strategy, we remain constructive on equities and risk assets in general for the most part. Although we do acknowledge that the global macro and geopolitical environment remains extremely fluid, and domestic equity markets will be reactive to these developments, some of which may not have been fully priced in. The US compulsion to contain China really is having the inadvertent result of giving momentum to the BRICS movement and spurring global multipolarity as well as long-term de-dollarization trends. And long-term, we see structural weakening in the US dollar And this could be one of the factors that helps to shift portfolio flows back to high growth emerging markets. As it stands, we've seen a net foreign selling of about 15 billion ringgit year to date. Foreign ownership levels have fallen to 18.8%, all-time low. Ultimately, domestic FPM KLCI has underperformed our regional peers year to date. And as a result of this underperformance, much of the risks have been priced in. And the recent support measures, including what I mentioned earlier on in terms of the preemptive rate cut, growth initiatives, FDI inflows, and stronger ringgit will be overall supportive. We also see significant amounts of sideline cash on the sidelines that we think will help to support market on the downside, and that will limit the downside for the market. Although the fundamental upside will be capped by the strength of corporate earnings. So overall, we have moved our year-end target slightly higher to 1620. This is up from 1600, and this reflects a more aggressive target P of 15 times. We compared to 14.7 times that we previously used to reflect the robust domestic liquidity conditions as well as improved clarity on US tariffs. 15 times represents a 10-year mean forward PE, but is a slight premium to the 7-year mean that has now fallen to 14.5 times. Okay, so that's it from me. So I think reasonably satisfactory June quarter results overall, and I think going forward, a lot will depend on news flow going forward. We would be looking at buying on weakness and not be too aggressive to chase stocks higher, and therefore we do see a bit of a trading market between now and the end of the year. All right, that's all from us. Thanks for joining Morning Kappa at 8, and we will see you again tomorrow morning. Cheers.